are focused on investing in the Middle East and North Africa. We've done probably about 40 investments in North Africa over the last 3 years, 180 investments in the last 3 years in total across the region. Yeah, I'm just really happy and excited. I've been learning about the African ecosystem for the past 2 years. I'm a judge for the semifinals for the Jack Ma African Business Heroes competition,
cool.
and that's really been really interesting. And so
I got to get you to come on the Nest. Have you come onto the Nest before? Have you heard of the Nest?
I have not. No. But
okay, so it's like a Shark Tank, Zoom Shark Tank. We'll talk about that separately. I got to get you involved in that. That's like, and maybe Frances as well. So it's a sort of started by a guy called Jim Chu. It's a social impact entrepreneur, and it's basically a Shark Tank on Zoom for emerging markets. But anyway, we'll come back to that.
Yeah.
So my name is Raj Kulasingam. I'm a lawyer at an international law firm called Dentons. I work with our VC team across the globe. That's my day job. By sort of the evening job is I'm an investor, mentor, advisor with a bunch of startups. I'm an investor in one accelerator in South Africa called Startup Bootcamp, number of funds. So love the space. And today we're going to talk about how accelerators can help move the needle. And maybe I'll start off by asking the question, what would you look for? I know, Hasan, you've been on both sides of the fence on this. What would you look for if you were an entrepreneur looking for an accelerator? And I guess question as well, are you looking for something that has to be Africa focused, or does it need to be? Those are kind of, I think, those things that people might be interested in talking. Sure. Isaac, you've just joined us as well. Sorry, Isaac. Isaac's the speaker. Hey, Isaac.
Hi, how are you doing?
Introduce yourself.
Sorry, yes. Hi, everyone. My name is Isaac, president of Dreammaker Inc. We're an asset management company. Started off in the real estate space and then built it out to a real estate development company. Jumped into the venture space about 5 years ago. And here in Canada, we launched the first Black tech incubator within the DMZ. And now we're about to launch the first institutional venture fund focused on Black entrepreneurs here in Canada as well.
And are you just focusing on Canadian companies, or are you looking beyond?
We're looking beyond. So actually what we're doing now with the Black Innovation Fellowship, which is our tech incubator that has both regular incubator and accelerator, is to now connect with other incubators in Africa, specifically South Africa, Nigeria, West Africa as well. And then be the bridge for companies in Africa that are trying to enter North America and companies in Canada that want to enter Africa.
Okay, cool. So let's go back to the question I had, which is, what would you look for? And maybe I'll start with Hasan because you've been on one side of the fence. What would you look for? Your ideal accelerator, right? If you're a startup in Africa, what would be the characteristics of an ideal accelerator?
I think really the value of an accelerator is just filling in the gaps in terms of what it is that you don't know. And the problem is that you don't know what you don't know. So that's a very difficult thing to try and figure out. But I think most people have an understanding of where their weaknesses might be. So if you're more focused on being a business development and sales sort of founder and founding team, you might need some more help on the technical side. So finding an accelerator that can help you there is probably useful. Having said that, I think really, accelerators in general are pretty much a way for you to try and package yourself in a way that's more, I guess, digestible or understandable to investors. And I think that's probably one of the primary reasons that people join accelerators, and that's not a bad reason at all, right? Like if it helps you speak the language that'll allow you to really fundraise and scale your business much further, then I think that really is something that is of use. There's also a lot of sort of value in these sort of vertically focused accelerators that have been popping up over the past few years, where if you're a company in fintech, like these vertical accelerators will really help you specifically in that segment. They'll have mentors that are specialized for you. They'll have like a lot of really amazing benefits that really will help you quite a lot. But honestly, like, apply for every accelerator you possibly can. Don't go to every accelerator that you possibly can. Like, don't accelerator hop. That's not a good sign usually. But I think it'll really help you just understand what it is you need to do to talk to investors and get to the next stage.
And Frances, I mean, maybe do you want to jump in as to how would you sell yourself as an accelerator to an African startup today?
Yeah, I mean, I think whenever you're considering any accelerator, you want to be thinking about, a few different things. One is, and first and foremost, like who is the network surrounding the accelerator, right? Because you're going to want to be with people that are going to be able to really understand your business, that have real legitimate experience. How large is their mentor and expert network? And, are there people within that can actually support you? I mean, even as we're choosing companies on the other side, whenever, because we're industry agnostic and we're country agnostic, whenever, I'm really looking at a company, it's like, do we actually have the network to support this business? Because if we don't, it doesn't make sense to work with them.
Sure.
But outside of also network, there's also the educational aspect, right? Where you're learning about how to actually, build a business. So what are the types of topics? What is their curriculum? What are the gaps with what you need help with, to understand? Because, and as, mentioned before, if it's like very verticalized and you need to work on your product, there's a lot of support that a verticalized accelerator can have that's going to be very unique to your business. Whereas for us, where we work with companies that are really more now ready to do go to market in the US, the expectation is they already have a product. They already have, some of those aspects built in. And so it's really about sales and customers. And so it's less imperative that we're, verticalized and we can be industry agnostic. So really looking at what are the educational gaps that you have in the curriculum. And I think the relationships connected to the accelerator are going to be some of the biggest things to consider.
Cool. And how do you pick, Isaac? I'm going to ask you, how do you pick companies? What's your filter? I guess question mark is, kind of where's your geographic focus? And you talked a little bit about that. And what's your filter? How do you make a decision? Are there any pointers you can give to entrepreneurs as to what they should do, should not do? What's the good, the bad, the ugly?
Yeah, no, great question. And for us, our incubator has, again, 3 different levels: Sandbox, which are new companies; Validator, which are companies that are already started and thriving; and then the Accelerator, which we're here talking, is focused in Canada, but the reach through the DMZ is global. So we do have satellite offices in New York, and we're setting up one in Bermuda. There's one in South Africa, Mumbai, India. So for us, specifically the Black Innovation Fellowship, what we're trying to tell companies is that depending on what your needs are, like as you mentioned, if you want to go down a vertical of fintech and you want to enter the North American market, our accelerator will be able to open up doors at various banks. If you want to go down the insurtech space, we could open up a lot of contacts within the insurance company. So it's always good to be able to properly explain what the needs are and what your gaps are, so that accelerator could see, okay, is there a fit, and can they actually provide the value that you're trying to reach? And then, of course, within the accelerator is getting access to resources, because as your company is accelerating, the next piece is, okay, how do we get access to capital to be able to expand and take on the opportunities that are being brought to the table? So the environment is definitely key, and having a clear idea of what is a win when you go through this 3 months, 6 months, 12-month accelerator program. What's a win-win situation, so that the expectations are set up front, both for the accelerator and for the entrepreneur. So for us, I like to have conversation with the entrepreneur and say, what are you trying to achieve out of this? Is it just to get connections to grow your business? Is it to collaborate and potentially get a new CFO or a new marketing executive? Or is it to be able to position yourself to raise a Series A or a Series B, right? So based on what their expectations are, we'll say, okay, you know what, the accelerator works for you, or you know what, it doesn't. Here's a few different contacts, contact them, and then just keep on going with your game. Because we always want companies that come into accelerator that fully put all their energy and focus on it as well too, so that they could get the best out of it, and not just saying they're part of an accelerator, but not really getting the best out of it.
Sure. And Hasan, as a VC now, sort of, gamekeeper turned poacher, you're now on the next stage, right? So you're one step ahead. How do you see? I always see the sort of ecosystem very much being like a relay race, right? So you have incubator who passes on to the accelerator, passes on to, or maybe you have angel investors before. And as a VC now, how do you see your world sort of working with accelerators, and which of the accelerators that you find yourself looking to work with?
I mean, accelerators, honestly, for me as a seed stage investors, is an extra sort of data point that I can refer to in terms of, the quality of the founders and the quality of the deal. But honestly, like not all accelerators, like some of them are really crap. So you got to be really careful about that. So in general,
So can you tell me later the crap ones? You don't want to tell me now, okay?
and even within accelerators, like we ran accelerator programs previously in the region, and we ran, I think, about 5 batches or so of accelerators and put about 100 companies through those. And honestly, like through the program, just in the first couple of weeks, it filters out the top third, the middle third, and the bottom third. Like it becomes very apparent once you start working with these founders really quickly. So one of my sort of things I tried to do is get close to the accelerator managers and get information from them about how the company has performed, not just the demo day, because demo day is a very nice, polished little beautiful thing for most investors. But for me, I want to know how did they perform during the whole like 3 months or whatever the accelerator program was. And I think, that really is an extra data point rather than me spending 3 months with them, someone else has, and they can sort of give me that update. And there's a lot of good accelerators. I think, of course, the number one is Y Combinator. They're the sort of the gold standard of accelerators and created the whole thing, and still are. So we're really excited when one of our companies, even after we invest, ends up in YC because it's
sure.
the value to us. But there's a lot of really good accelerators out there that are really helping companies, giving real value, investing in them, and supporting them get to the next stage. And I think really what I like to see is when in demo days I see a graphic looks like this, where the accelerator helps the startup figure out how to scale and acquire customers and users during that sort of 3-month period. And we've seen it firsthand. We've seen companies that have grown by 10x just in 3 months. And we've also seen companies completely fall apart in 3 months. So it's a whole basket of things.
And I'm interested in people's views on, and actually maybe particularly Hasan, as a VC, do you see, I mean, on the validation point, does that reduce the level of due diligence you would do on a startup that comes out of an accelerator versus a startup that doesn't come out of an accelerator?
No, not really. I'd still do the same amount of due diligence. There's still a lot that can go wrong. It's just an extra data point, and it's usually a positive data point, unless the startup really did a very bad job in the accelerator, in which case, that's not a positive one. So always good to build those relationships with the people that are working day in, day out with these startups during the program. Great.
I want to sort of turn a little bit towards kind of the nuts and bolts of running an accelerator. And Frances, you and I talked about how, COVID has actually, in some ways, helped you run the accelerators. Do you want to tell us a little bit more about that? And maybe that will actually sort of blends nicely into our conversation about you trying to do more work with companies across the continent.
Yeah, so, we used to have, like pre-COVID, all of our startups come to New York for, the full 2.5-month program. And, we were really of the mindset that them being, 100% focused and in the market and away from their team was going to be like the best way to do it. So they were not distracted as they're trying to build out the US market. And we just completed our first entirely virtual cohort, and we just graduated 7 founders. And there was a lot of unexpected advantages of being in this sort of, virtual format. First of all, like the world is smaller. So we weren't able to, normally when we would do our demo day in New York, our VC contacts that were maybe primarily based on the West Coast weren't necessarily always able to attend unless they happened to be in New York that week, all sorts of things. And so now, they're much more able to be engaged with the program and with our startups. A lot of our, investors and our corporate partners, there's not as many events happening. You can't just go to a pitch event and meet a bunch of startups and start a relationship. So they actually need organizations like ours even more to connect with our startups because there's no other way for them to, be seeing these, innovations. And also the time zone aspect. So we're running our programs in the morning so that, they're able to attend in their sort of later in the day. But they're actually much more aligned with their team now because their team is with them. The team is actually a part of the process now as they're going through the accelerator. And we've actually seen huge advantages to that as well. And so, even though there's a lot of negativities in our world right now, we miss being in person, there's still this strong ability to connect and actually make the world smaller to help these companies even further.
Isaac, what's your perspective on that? How's it changed since COVID?
Yeah, so in the last 12 months, last year when we started the Incubator Black Innovation Fellowship, we had 10 companies come on board. This year, in the last 2 months, we've raised $3 million to now expand it to be able to have capacity of 300 companies, and now running across Canada and now working with other incubators that once the border opens up, they could, through our startup visa program, they could come through, integrate into the Canadian system, get their permanent residence and sort of expand their business here. So COVID has actually allowed us to have a larger reach. So we're getting companies reaching out to us from the UK, from all across Africa, saying, me and my family, we're looking at coming into North America. We want to come to Canada, and we see that you have the Black Innovation Fellowship, which is specifically targeting Black entrepreneurs, but in collaboration with the Techstars, the DMZ, and other different incubators that are currently in Canada. So they know that they have that sort of safe spot to land in. So COVID has allowed us to do that reach and to be able to hit more entrepreneurs.
Hey, can I, you said something interesting. You said, you want to support more Black entrepreneurs. I mean, obviously, there's been a lot of focus on the fact that the industry as a whole doesn't support as many Black entrepreneurs as, comparatively. Well, female and Black entrepreneurs seem to be the most marginalized sections of the society. Us blokes generally seem to be doing better for, whatever reason. Well, maybe we'll come back on the female side a little bit, but I want to get your perspective on, what you mean by supporting Black entrepreneurs. I mean, Black is a color, but there are shades, right? and what's the criteria for being Black? Is Hasan Black? Am I Black?
It's a good visible minority. It's a good question. Really, we're targeting underrepresented founders. When I got into the venture space about 5 years ago, I saw Toronto was becoming sort of Silicon Valley North, and we started our venture fund to collaborate with our real estate fund and start to do some strategic investments within the tech space. And then I got invited to speak at a few different tech events. And when I would go to those tech events, I noticed a large lack of diversity. And as a result of that, that's why I went to the university, raised $1 million and said, let's be deliberate and launch in the first Black tech incubator, of which 50% have to be women-led businesses. And we were deliberate on it's obviously we leave it to the founder to check mark if they consider themselves Black, right? And in terms of the race, but visible minority. And what is the purpose of it? Is to provide access to top mentorship, access to the traction team to be able to drive business for them and open up doors that typically they're coming from a background that they may not be able to have their father or mother pick up the phone and call a bank executive if they're in the fintech space. And then access to resources, which is obviously one of the biggest thing all founders face, but more specifically, underrepresented founders and Black founders face access to that seed capital to even start that business. So the Black Innovation Fellowship in Canada is creating that capacity for Black entrepreneurs to be able to find a place where they could collaborate with, and it's integrated. So we didn't want to do anything in silo because there's no growth in silo. So it's fully integrated with all entrepreneurs within the tech space. And now the resources piece is with the Black Innovation Fund.
Cool. Listen, I want to sort of, it's always useful to hear sort of stories, of successful and not successful entrepreneurs. You don't have to give names if identity is an issue. I'd love to hear your best story of a startup that went through an accelerator program that has, how it succeeded, why it succeeded, what do you think the factors were, how that accelerator played a part in moving the needle. Love to hear those, your perspectives on that. Frances, do you want to start with you?
Yeah, sure. I think, there are a lot of startups that I think utilize, various different programs for various different reasons, whether that's, the primary objective is to raise funding, et cetera. I think for us, since a lot of our companies, like the primary objective is not only fundraising, it's really about like, can we move the needle forward for like sales? And so for us, a really good indicator is like when they actually open an office in the US and are able to, really start building out a team and have their first sales. So we've had like a number of companies. We had a company a few years ago that closed a $700,000 deal like week 7 of our program. And so for us, like that's a huge success because that shows that like there's actual real viability in the market, et cetera. For some of the founders, it is around raising investment. Like we had a company from, India, 2 programs ago that, raised their Series B of, 22 million. And so for us, it's really about like what is those founder specific objectives and then, supporting those companies. And we've seen companies fail as well, where, it was not the right timing for them for the market. They were convinced of the US. We saw enough potential opportunity, but it just actually wasn't the right timing or the right fit. And so they learned that. And we've had founders then from failed companies found new companies together as well. But like, that's some of those serendipity aspects.
Hasan?
Yeah, I've seen so much. It's like
pick one. Come on, you must have one favorite story, right?
I have lots of favorite stories. Like honestly, the companies that we put through our programs previously, we were expecting them to grow by at least 3x over the period of the program, and most of them managed to do that. Sorry?
How long is the program?
So we ran 2 programs. One was a growth program, which was 1 month long, and another one was a 3-month long accelerator program. And I actually really like the 1 month one because it still grew them by 3x. I mean, they were slightly later stage, but it was more about giving them the framework and mindset for growth rather than anything else that allowed them to really realize what they needed to focus on. And so, we've invested in a couple of companies. One startup grew by basically 10x during the 3-month period that they were with us. Another basically went from 0 to about $100,000 a month just in 3 months. So but the thing is like, that really isn't the accelerator. We can give the mentorship, we can give the framework, the guidelines and everything like that. But it's all on the founders. It's how much effort they put in, it's how much they absorb, it's how much really they're trying to make sure that they succeed. And we've also had companies which after week 2 have been pretty much, we knew that they weren't going to succeed and they knew they weren't going to succeed. And that was it, basically for quite a few companies actually as well. Overall, I think an accelerator makes sense for me as an investor to be picking deals from, but to run an accelerator like Frances, Isaac, I don't envy you guys in any way, shape, or form.
He's come out of the other end, right?
I'm good. I never want to run an accelerator again.
So to add to that, I definitely don't run it. I seeded it. I started. I created the infrastructure, and there's much more knowledgeable individuals to run it. And similar to yourself, we have the fun to sort of pick and choose and cherry pick some of the best ones that come out of it.
Hey, the one thing that I like about the promise of accelerators, accelerators promise a lot of stuff, right? But the question is, do they deliver? And the thing that I like, the biggest promise I often hear is that, join our accelerator and we'll connect you to, the banks, insurance companies, the car leasing companies. I mean, how does that actually work in reality, right? I mean, is it a question of, you've got the CEO's number, you call him up and say, hey, I've got these 3 companies in my cohort this week, will you take a meeting with them? How does it work in real life?
I mean, we're always building network. It is like our number 1 job is just relationship building in all different verticals. And we have verticals that we're stronger in because they're like naturally network there comes from New York. Like my background was like as a hyper connector in the tech ecosystem in New York before I joined the founding team of the New York office for NUMA. And so I was able to seed the network seed the NUMA network with my existing network. And then we always are building from there and like, meeting, bringing in new different subsets of mentors. meeting with new investors. Like, it is everyone on the team's job to always, always, always be building more relationships that will like be excited to take calls and work with our startups. So it's and it's a hugely manual process maintaining a network. It's a lot of work. So for those of you that are not running the day to day, yeah, I envy you.
But how does it? I mean, what's the? Just talk us through practically how. Give us an example of a startup that you connected to. I don't know, 3 companies. How does it actually work?
Yeah, so we always use double opt-in intro. And so we did have a company in this last program that was like heavily focused on banking. We have a lot of banking networks. So then it's like, emailing, the innovation officers at BNY Mellon and saying, hey, we have this startup in this program. It has this solution. Like, would you be willing to take a 30-minute meeting with this specific company? And their relationship that we have, they've met with some of our startups in the past, but we're like hyper relevant. So they know that we're not going to like push on them constantly unless it's not like actually relevant for them. They say yes, we make that intro for the founder. And so there's a lot of like manual work that goes into those intro asks, and we always use double opt-in. So we'll never connect to a startup to somebody unless they've already said yes to the meeting.
I've just learned a new phrase, a double opt-in. I've never heard that one before. That's a new one on me. Double opt-in. Okay, I
Yeah.
got that one. So I think we're sort of in the last 4 or 5 minutes. I'm going to throw it open. Maybe, I've been asking the questions. You guys, why don't you ask each other some questions? That'll take the pressure off me a little bit. But whilst you're thinking about that, let me ask you a question more focused on Africa, right? So you've been following the Africa. I hope you've been following what's happening on the continent. I think we've had some great stories that you may have seen. There was a great story recently where Paystack got bought out by Stripe for $200 million. There's a lot of stuff coming. Are there any particular parts of the continent that you're focusing on? Are you trying to? How are you building relationships across the continent?
Sure, I guess maybe I can go first. My focus really is on North Africa. So,
and where's North Africa? I mean, I know where it is, but I mean, what countries are we talking about?
So Egypt, Tunisia, Morocco, Algeria are the primary markets that we're investing in. One day, hopefully Libya as well, but not yet. So that really is our area of focus, and I think the thing that I've really learned is Africa is not homogenous in any way, shape, or form. There's French-speaking Africa, there's West Africa, there's East. There's like so many different ways to break up Africa, and I think that just having this mindset of I'm just going to invest in Africa, it just doesn't make sense. The more I've been like learning, the more I'm like, well, these are very different ecosystems, and so really my focus is in North Africa, and that's what I've been doing. But I've seen amazing founders from everywhere, all over Ghana, Uganda, Tanzania. And I think actually there's a lot of opportunities in the smaller markets in Africa, which is still pretty large, which I would probably focus on if I was going to be investing. I'm a little bit of, I like that sort of stuff more than just investing in Nigeria.
I mean, I've my investment in Africa have been Nigeria, Ethiopia, and Kenya, and then one was just kind of numerous countries. Ethiopia, I think, is a really fascinating country. 100 million people, sort of coming out of a socialist government, still coming out in many ways. So I think Ethiopia has got a lot of. It has some issues you may have seen recently as well, but I think Ethiopia is a fascinating country. Isaac, Francis, do you want to just pick on those themes?
Yeah, for us, we're sort of connecting the dots across West Africa, and outside West Africa, Kenya as well too, specifically Nigeria, and what we're doing similar to how we set up our incubator within a university. We're connecting with other universities as well too, and sort of trying to replicate the same accelerator program and incubator program as well too.
And for us, to date, we've only had 2 companies from Tunisia. We would love to have more companies from more different countries. We usually partner with a lot of like VCs and other accelerators. So Hasan and Isaac would also love to speak with you both afterwards. But we're always looking to grow the number of people that we're supporting.
Well, I think we're coming up to the hour, and Hasan has got to go and try and get some money from some people. So good luck with that, Hasan.
Yeah, thanks so much. All right,
if you get some money, will you make sure you tell us that you were successful? Okay.
Will do.
Bye, everyone. Come your way. So thank you very much, all of you, for engaging. It's been fascinating talking, and I'm sure we'll keep talking. And thank you very much.
Sounds good. Thank you.
Thank you, everyone.
Cheers. Bye.